Joining me now in a CNBC exclusive is Jennifer Witz. She's the CEO of SiriusXM. Nice to have you down here.
Great to be here. Nice to see you.
Let's talk about the growth prospects for the company. Obviously, it didn't grow this quarter, but what can you tell investors in terms of whether there is growth in the future of SiriusXM?
Yeah, well, first of all, David, the quarter itself was expected, largely came in line with what we thought. And over the rest of the year, we expect to make progress on subscriber net adds, with the second half of the year being positive. And really what we're trying to do is set up the company for future growth. We have an incredibly strong platform, loyal subscribers, customer satisfaction is an all-time high from 2009 to now. And the economic model is robust as ever with high ARPU and high margins. And so it's really a setup for the building of this new platform that we're launching at the end of the year that is going to better position us to take care of the pain points that many younger audiences have with our service and trying to find content and get into the service.
What do you mean by that, finding content? What are these pain points?
We're already delivering on that with 360L because if you come into the car today, you have a broadcast service that largely you navigate by turning the dial. And with 360L, which is in about a third of our trial starts now, our new car trial starts, younger customers and just our trialers in general can come in and better navigate the experience to find the content they love. So we know when customers find the content, find a broad set of content besides music, but also non-music content, and experience the broad set of content that we have, that they convert at much higher rates.
And so in terms of the growth strategy, is it about adding subs as opposed to pushing price? Because I am curious as to where you think you are in terms of the consumer and their willingness to accept any price hikes.
And so we're rolling through a rate increase on our full-price subscribers today, and that'll continue to drive revenue over the course of the year. But I think we're really well-positioned on both. I don't want to drive subs at the expense of revenue, but at the same time, I think we have the opportunity to capture more demand to the extent we have more flexible pricing in market.
I know myself, I have a couple of cars. I had my it coming up, and I was able to get a much better deal, Jennifer, than I had. A significant discount.
You negotiated, huh?
I did negotiate. I don't want to tell everybody out there I don't want to damage your business at all. But I'm just curious in terms of what you see as what the average, what the ARPU is, and whether you really do see the ability to move it up as a result of people perhaps looking for deals.
Yeah, I think the ideal scenario for us is to make sure that we have a broad set of packages with different levels of content and perhaps access to be able to capture that demand at different levels. But we also have a package at $35 a month, which has been very attractive for people like you that have multiple cars and want to be able to stream in and out of the car. So I think there's room for us to capture more revenue from our existing subscribers who remain very loyal to the service.
What are you seeing in the ad market right now? Obviously not just Sirius, but people forget sometimes that you own Pandora as well. It's not the easiest advertising market.
Yeah, we actually had a really solid quarter. Ad revenue was down about 2%, which was better than our initial expectations. I think when we met in November, we certainly were seeing different trends in the market. And a lot of that has to do with podcasting. Podcasting continues to be a bright spot for us. We have a great set of content that we're representing, and we were able to capture a lot of late quarter bookings when advertisers came into the market, budgets opened up, and we could do that through our programmatic offerings across music streaming and in podcasting.